CFTC, the Commodities Futures Trading Commission, has just posted a $250,000 fine against the Ooki DAO. We'll also be looking at average block size and why that matters when making an entry into Bitcoin right now. All right, before we do that, let's jump into the charts. 1 hour on Bitcoin, a lot of futures activity, a lot of calls, really interesting market right now. On the flip side of that, showing actually really low volatility overall. As noted yesterday, we'd be bouncing around at that 19.1, 19.4K. Our total price is giving us a readout at 19,299 and 19,220, extremely tight range. So if we can't make the marker here, we're in the first quartile of this current volume bar. If we can get second quartile, we're likely to fulfill this minor breakout opportunity at 50%, but profitability weighing to the weak side, and we're at the middle of our price strength. So with some gappage on the machine learner and some extremely weighted synchronicity to the buy, we're likely to fall out of any kind of quartile below fourth quartile back to the lower end of this range, and again challenge this lower part of 19,000 in the next few hours. In the immediate term, over the next 2 days, you're looking at challenging maybe lower levels again at 18,900, and quite possibly in the next 2 to 5 days 18,800, with a top side initial balance of 19,200 for Bitcoin. Yesterday, we went through this volatility history using 2 different volatility indexes. Where I think we are right now is really comparable to May to November 2018. Solana to the upside here, just failed it though at about $30.30, forming a new initial balance on the 90-day, but on the 5-day, we're still pretty strong on Solana. And in the next few hours, if we can get a second quartile on this current bar to fulfill, which will probably result in a bullish divergence on our candle, if we get any kind of wicking. For the next 2 to 5 days for Solana, we are contracting this range and likely hitting a new initial balance at $30.30 and $31.20. But with weakness to come on Bitcoin in the next 2 to 5 days, you can definitely expect to challenge again and form a new lower level channel at the $29 mark for Solana. Ethereum, 1 hour, strong breakout opportunity in the third quartile right now, but looking like we need a lot of strength here in order to push price up. A synchronicity weighing really heavily, volatility way down, top side of our marker on the strength in this range, which is fairly tight at 1265 to 1336. I think that we can continue to trend in the middle here, but that's top side right now for Ethereum. We're likely to hit this bottom end and possibly even form a lower level channel. And last I looked, I think 1220 is still sunshiny for the lower level of this channel, but we will definitely range along this trend line support resistance here at 1260 for the next 2 days. 2 to 5 days, it's possible that we bounce off of this lower 1200 range for Ethereum and pop back up, but we're likely to squeeze this range here at 1220 to 1265 for Ethereum the next 2 to 5 days. Luna Classic, as mentioned yesterday, we continue to build pressure into this diagonal. We hit this mark at 25, right on schedule. So this is likely leading to a breakdown to 23. As forecasted, we have a minor breakout, but required a 90th quartile to push us up. Last 10 bars, weak volume overall. Dispersion up though, but we're on the top side of our strength here, and we have extremely low volatility and synchronicity weighted to the buy. Our profitability giving us low indication for chance on resolve at 46% on the 90th. I think that most of this 32 billion is washed against the total crypto market, looking like we have close to 60% likelihood of touching this 23 mark from the Classic within the next 2 to 5 days. However, with the strength of the community, I think you'd likely be wiser to stretch out that timeline a little bit, but we're definitely following this trend line here. Injective, glad to see it. Had a pump on this ascending triangle here. We popped out of it really well. Top side of this channel I called as highly likely, broke clean out above that. So 187, we actually hit 195. At the moment, we're getting a weighted breakdown here, and profitability a little weak though. Likely to build into this pressure, we have a descending opportunity here on dispersion and synchronicity weighted to the upside. So most likely expecting a breakdown here, but what's happening with injective right now is really interesting. So I'd expect, based on this 1 hour chart and the past 90-day deviation, next 2 days bouncing around this $1.88 mark. Serum falling into this tight channel we formed a couple days ago like a glove. Based on behavior, just going to bounce around inside of it, bottoming out right now at 53% opportunity, profitability 54. So looking at our price weakness forming out on the RSI, machine learner off the chart, zero synchronicity, dispersion really weak. Saw some 90th quartiles coming in, but mostly under the 3rd quartile. So I don't think that we have much opportunity to break out of this sideways action for the moment, unless we get a unique pump like we did on injective. So again, next 2 days, top side 72, bottom side 70 for Serum. Cropper, I wasn't expecting this much price action on Cropper, but we're getting a lot. And we even saw some 90th quartiles popping in. Price strength near topping off, so we could round out here on this volatility, and synchronicity continue to weigh to the buy here for Cropper. Really interesting action. Not much dispersion though for the past, so that's why we're seeing a lot of 90th percentiles popping up. Let's see what this can take us. Profitability ticking up a little bit for Cropper in the past couple of days. So based on our machine learner, I think that volume, volume activity could decrease, but that might actually be bullish right now for Cropper. Radar. I've talked about this project, but haven't charted it here on the show, so I thought I'd do that really quickly today. And these sort of bearish consolidation type markets, these DApp and NFT aggregators could be really useful, and you could see money flow into these at these times. So seeing some quartiles, but that's market-wide trend with low volatility in the middle of our strength here, and we actually went sideways, but had a reserve candle here pop us back into the initial balance for Radar, right off the bottom of this trend line here that's forming out on a flat. So based on dispersion, I think with deviation, we could see some upside tick for Radar. And based on the chart here, we have a channel top side of 0067. I think we can break out of that with some bullishness and form a new topside channel here with a previous resistance and support of 69. If you were following Radar, we trended at 69 for quite some time. I think we get back to this channel. It's looking like a above 45% likelihood that we get back into this channel between 67 and 69 in the next 2 days. All right, so to add layers onto what we talked about yesterday, looking at in-house activity, another good chart to look at is in-house transactions. And looking at previous in-house activity and how that relates to price. Seeing some really weird activity here just recently. I know Coinbase had a situation where Brian Armstrong was talking about selling off. I don't know if this is it. This could just be a glitch right here momentarily. You can see where transactions go sideways. It doesn't happen very often. And when it does, it's very short-lived. So I can't go back further than 2019. Currently, compared to what's happened in recent history, this is new territory for the crypto market. And I think a good way to look at this information and the situation with Bitcoin and overall the crypto market is looking at average block size. So right now, average block size is increasing on the average. And we're seeing a lot of miner capitulation recently, which is increasing the cost to compete on Bitcoin and Bitcoin mining. And I know we have things like segregated witness, SegWit, expanding blocks, and sideways development on Bitcoin like stacks. We see here that exchange trade volume is dipping hard. So obviously revenue for miners is going to continue to go down. Opportunity in the crypto market on ROI has massive upside right now. We could continue to go down on price for Bitcoin, and you might be mindful to watch price, as we've seen in the charts and we've been calling here. If you look at overall activity on the crypto market, these are a lot of indicators suggesting that when we can return to sustainable levels on the Bitcoin, because if you believe in Bitcoin, it's not going anywhere. If we can return to these more sustainable levels, these less manipulated looking levels, topside price is increasing the likelihood. Every likelihood of a higher price is increasing every hour, every day, every month for Bitcoin. So with average block size continuing to increase, that's, it could say a few things other than segregated witness and SegWit and sideways development like stacks on Bitcoin and Lightning Chain. This is really saying that large blocks, which require more resources to produce, those are favoring higher revenue sources, higher cost mining that will favor people with more money. The more transactions you can fit into a block, if that is what's being reflected here, as exchange volume and price and average block size and hash rate continues to deviate away from each other, it's maximizing opportunity on upside for price. It's maximizing ROI. All right, well, so last piece of news, judge ruled in favor for the CFTC to fine Ooki DAO $250,000 based on project's founders marketing trading off exchange digital assets. This article is citing that this is a bad omen for developers in the US. I think that's way off the mark. When you market yourself and profit promise off of this sort of activity, off exchange trading of assets, this is taking a hard pivot from legality. And I agree with the overall message in that regulation needs to do better to get it right. CFTC and SEC have not made clear regulation protocol for the American market to maximize opportunity and revenue to survive and build this infrastructure. I'd like to see more disclosure as to what CFTC wants from the crypto market rather than explaining that through fines. So this could be encouraging depending on how you want to spin it. But for me, this raises a better question. Are NFTs looking better here? NFTs are natural DAOs in that they could be easily token gated. Activity inside NFTs can operate like closed communities and they don't need to call themselves DAOs. All right, that's it. Trade safe, have fun. See you on the next one. Thank you.